Stop whatever you are doing right now, because what happened in the last 24 hours just changed the entire global financial landscape. And if you hold silver, or you have been thinking about silver, or you just want to understand what is happening in the world right now and what it means for your money, this video is the most important thing you will watch today. Ayatollah Ali Khamenei, the supreme leader of Iran, is dead. United States and Israeli forces have conducted coordinated military strikes on Tehran. Iran has retaliated against U.S. military installations. The Strait of Hormuz, the narrow waterway through which 20% of the entire world's daily oil supply flows, has been effectively closed. And silver is sitting at $95 an ounce and climbing. Welcome to the channel. Let's talk about what happens next. Before we go any further, I want to be upfront with you. This channel launched just days ago. We are brand new. But we built this channel specifically for moments like this one. Moments where the world is moving fast, the data is flying everywhere, and most people have no idea how to connect the dots between a military strike in Tehran and the price of silver in New York. That is exactly what we are going to do today. So if you are not subscribed yet, do it right now. Hit that bell. Because the next few days and weeks in this market are going to move fast, and you do not want to miss a single update. Now let's go back to yesterday, Sunday, March 1st, 2026, because the sequence of events matters enormously here. Iranian state media confirmed the death of Supreme Leader Ayatollah Ali Khamenei following Israeli strikes on Tehran. Almost simultaneously, U.S. President Donald Trump announced what he described as major combat operations against Iran. Iran responded with retaliatory strikes on U.S. military installations and Israeli targets. And within hours, Iranian forces moved to effectively close the Strait of Hormuz. In a single night, the entire geopolitical calculus of the Middle East shifted. And financial markets woke up Monday morning in a state of shock. Gold immediately surged nearly 2%, testing $5,400 per ounce, its highest level since January 30th. Brent crude oil spiked as much as 13% to $82 per barrel at the open. The Dow Jones Industrial Average dropped 1.3%. The S&P 500 dropped 0.4%. The Nasdaq fell almost 1%. And Silver opened at $94.26 per ounce at 8:45 in the morning Eastern Time, hit an intraday high of $95.35, and is currently trading with a gain of 1.68% on the day. The market is in motion, and it is not done moving. Now, I want to take a moment here to explain something that is genuinely confusing a lot of silver investors today, and I have been seeing this question all over the comments and forums this morning. If a war just started, if Khamenei is dead, if the Strait of Hormuz is closed, why isn't silver going absolutely vertical right now the way gold is? Why is gold surging 2% while silver is up less than 2%? This seems backwards to a lot of people. And the answer is actually one of the most important things you can understand about silver as an asset. Silver is not just a safe haven metal like gold. Silver is also, fundamentally, an industrial metal. And when a war breaks out and oil prices spike 13% in a single morning, the market immediately starts pricing in a different kind of risk for silver. The risk that oil-driven inflation forces the Federal Reserve to reverse its rate-cutting plans and potentially hike interest rates to control rising prices. Higher interest rates slow industrial activity. Slower industrial activity means less silver demand from solar panels, EVs, semiconductors, and AI infrastructure. So silver is currently caught in a genuine tug-of-war between two opposing forces. Safe haven buying pushing it up on one side, and industrial demand fears pushing back on the other. That tension is exactly why silver is not going vertical today the way gold is. But here's the critical thing, and I want you to really hold on to this. That tension is temporary, and when it resolves, the direction silver moves could be historic. Let me explain why. The Strait of Hormuz closure is not just an oil story. Most people are framing this purely as an energy crisis, and yes, Goldman Sachs has already priced in an $18 per barrel risk premium, and Wood Mackenzie is warning of $100 oil if the strait stays closed. But there is a layer beneath the oil story that directly and powerfully impacts silver. Silver mining is one of the most energy-intensive industrial processes on the planet. Every ounce of silver that comes out of the ground requires enormous amounts of energy, for drilling, for processing, for refining, for transportation. When oil goes from $67 to $82 in a single morning, the cost of producing silver goes up immediately. Not next month, not next quarter, right now. And when production costs go up in a market that is already running a structural supply deficit, the sixth consecutive year of deficits with a cumulative shortfall since 2021 now exceeding 820 million ounces. The math becomes very uncomfortable for anyone betting against silver. Higher costs plus tighter supply plus sustained demand is not a recipe for lower prices. It never has been. Now let's talk about the Strait of Hormuz specifically, because I think most people have a vague understanding of why it matters, but not a precise one. The Strait of Hormuz is a narrow passage of water. At its narrowest point, it is only 21 miles wide, that sits between Iran to the north and Oman and the UAE to the south. Every single day, approximately 20 million barrels of oil pass through this strait. That is roughly 20% of all the oil consumed on the planet every 24 hours. Saudi Arabia, the UAE, Kuwait, Iraq, Qatar, all of their oil exports have to pass through this waterway to reach global markets. If Iran closes this strait, even partially, even temporarily, the disruption to global energy markets is immediate and severe. And right now, Iran has done exactly that. The closure of the Strait of Hormuz is not a threat anymore. It is a reality. And the market is still in the early stages of pricing what that actually means. For silver investors, the Hormuz closure creates a compounding effect. Higher energy prices feed directly into mining costs, as we just discussed. But they also feed into inflation expectations globally. And here is the paradox that makes silver such a fascinating asset in this moment. While rising inflation fears are currently creating uncertainty about the Fed's rate path and putting some pressure on silver's industrial demand narrative, a sustained period of high inflation historically drives massive flows into hard assets, including silver as a store of value. Silver has been used as an inflation hedge for literally thousands of years. Every major inflationary period in modern history, the 1970s oil crisis, the post-2008 quantitative easing era, the 2021 to 2022 inflation surge, silver performed extraordinarily well. If this conflict keeps oil elevated and inflation runs hotter than expected, the argument for owning silver as a monetary metal becomes overwhelming. Let's look at where silver technically sits right now and what the charts are telling us. Before this war news broke, silver had already done something very significant. It had broken above $92 per ounce, the key resistance level that technical analysts had been watching for weeks. That breakout confirmed the completion of a cup and handle pattern that had been building since the fourth quarter of 2025. The last time a cup and handle pattern completed in silver, back in late 2025, it launched the price from around $70 all the way to $121.67. A pattern of that magnitude completing again, in the context of a genuine shooting war in the Middle East, with the Strait of Hormuz closed and oil at $82, is not a small thing. The next major resistance levels from here are $100, which is both a psychological barrier and a technical target. Then $120, which was the approximate peak of the last rally, and then $121.67, which is the all-time high. Beyond that, analysts at FX Empire and Intellectia are projecting $150 as a war scenario target. The $72 level from February 17th is now the critical support floor. A sustained close below that level would be a serious warning sign, but with the news cycle where it is right now, that scenario looks increasingly unlikely. Let's talk about what the major institutions are saying today, because the smart money is moving and you need to know where it is going. Bank of America's metals research team, led by Michael Widmer, had already projected silver could reach between $135 and $309 per ounce in 2026, with that extraordinary upper range reflecting the possibility of a physical delivery squeeze on the COMEX. That forecast was made before a US-Iran war started. Goldman Sachs has already priced an $18 risk premium into oil this morning alone. Wood Mackenzie is warning about $100 oil, and analysts at multiple institutions who cover precious metals are now quietly revising their silver price targets upward to account for the war premium, the energy cost impact on mining, and the acceleration of safe haven demand. JP Morgan had been the most conservative of the major banks, forecasting silver to average around $81 for the full year of 2026. That number is looking increasingly outdated by the hour. Now let's talk honestly about the scenarios from here, because this is the part of the video that actually matters for your decision making. There are three realistic paths silver could take from this point. The first path is escalation. If the US-Iran conflict deepens, more strikes, broader regional involvement, the Strait of Hormuz staying closed for weeks rather than days, the compounding effect on silver could be explosive. Oil stays above $80, mining costs surge, supply tightens further in an already deficit market, global inflation spikes, and safe haven demand overwhelms the industrial demand uncertainty. In this scenario, $100 for silver is not a ceiling, it is a launching pad. The path to 121 and beyond becomes not just possible, but probable. This is the scenario Bank of America's upper range was quietly pricing in when they published that $309 target. The second path is a contained conflict. Military operations remain surgical and limited, exactly what U.S. Defense Secretary Pete Hegseth described when he said the aim was to destroy Iran's missiles, navy, and security infrastructure, and that this would not become an endless war. In this scenario, the Strait of Hormuz reopens within days to weeks, oil pulls back from its spike, inflation fears moderate, and the Fed stays on its rate-cutting path. Silver would likely consolidate in the $90 to $100 range, still a powerful level historically, before making its next directional move based on the underlying fundamentals of supply deficit and industrial demand. This is actually the base case for most institutional analysts right now. The third path is rapid de-escalation or a diplomatic breakthrough. If a ceasefire is announced, if back-channel negotiations produce a rapid resolution, if the strait reopens quickly and oil crashes back, silver would likely give back some of its war premium and could pull back toward the $85 to $90 range temporarily. But, and this is absolutely crucial, the structural bull case for silver does not go away in a de-escalation scenario. The 6-year supply deficit is still there, the solar demand is still there, the EV demand is still there, the AI infrastructure build-out is still there. A de-escalation pullback in silver would almost certainly be a buying opportunity rather than the beginning of a new bear market. Here is what you need to watch in the next 48 to 72 hours specifically. Watch the Strait of Hormuz. Any news about ships moving through, any indication of partial reopening or naval negotiations will immediately impact both oil and silver. Watch the Federal Reserve. Any statement from Fed officials about inflation and rate policy in the context of this conflict will be a major market mover. Watch the dollar index. If the DXY breaks above 100, that could cap silver's near-term upside even in a war environment. And watch the $95 level on silver itself. A sustained close above 95 with strong volume would be one of the most significant technical confirmations silver bulls have seen since the breakout last year. Here is the bottom line on everything we have covered today. Khamenei is dead. The US and Israel have struck Iran. The Strait of Hormuz is closed. Oil is at $82 and climbing. Silver is at $95 in the middle of its 6th consecutive year of structural supply deficit, having just broken out of a major technical pattern, with the world's biggest financial institutions projecting prices between $135 and $309. If there was ever a moment that concentrated every single bullish factor for silver into a single point in time, this is that moment. The tug of war between safe haven buying and industrial demand uncertainty will not last forever. One side wins. And based on everything we can see in the data right now, the safe haven and supply side arguments are considerably more powerful than the temporary fear about industrial demand softening. $100 silver is not a prediction anymore. It is the next line on the chart. The question now is whether this market has the fuel, and based on everything happening in the world right now, it absolutely does, to blow straight through it. Now I want to hear from you right now. Drop your silver price prediction for the end of March 2026 in the comments below. Do you think the war escalates and sends us to 150? Do you think a ceasefire pulls us back to 85? Or do you think we grind through 100 and push toward the all-time high retest? Every single comment on this channel gets read. We are building something real here together, and your voice matters. If this breakdown added value to your day, and I genuinely hope it did, please hit the like button right now. It costs you nothing, and it helps this brand new channel reach the people who need to see this analysis. Subscribe if you are not already, because we are going to be tracking every single move in this silver market as the war situation develops in real time. This is just the beginning. I will see you in the next one.